Well, let's catch up with company results. Plenty of them this morning. Wealth manager AMP reporting a 5.4% rise in profit in the first half of the year, as underlying strength in platform business and its cost savings helped offset the falling margins at its banking operations. Net profit standing at $118 million for the 6 months to the end of June. AMP also selling its advice licensees and Jigsaw Advice Solutions business for more than $10 million, but will retain a 30% stake. The advice arm of the company has reported a loss of $15 million for the half year, a 40% improvement from the same period last year. Property company Mirvac warning earnings will be lower in FY25 as market conditions remain challenging. It's posted a statutory loss of $805 million for FY24, while group earnings rose 12% to $860 million. Full year operating profit falling 5% to $552 million. Shareholders will receive a distribution of 10.5 cents a share, on par with last year's payout. And that's tipped to be lower next year. Mirvac forecasting FY25 distribution of 9 cents a share. And as we can see, the share price coming off sharply as a result of that forecast. Transurban flagging a 65-cent distribution for FY25 after paying out 62 cents a share in FY24. That's a lift of 7% in line with guidance. It comes as the group posts proportional earnings of $2.6 billion, up 7.5% on revenues of $3.5 billion. Management is talking up cost control below inflation at 3.6%, saying it's delivering on existing projects and new growth opportunities while working with the New South Wales, the government there, on potential toll reform. Hall Long Wale REIT's statutory loss came in at $511 million. Despite the increased loss, operating earnings came in at $188 million. It'll pay a distribution of 26 cents. A security down more than 7% for the prior year. The loss included a number of non-cash and unrealised items, including the devaluation of investment properties. And CLW's manager, Avianga, saying the group has completed its strategic divestment of assets and has reduced its near-term lease expiry risk. It's provided distribution guidance of 25 cents a share for FY25. Light & Wonder posting second quarter revenue of $818 million for the 3 months to the end of June. It's a $1.57 billion for the half. Management is saying it's executing on strategy with gaming revenue up on global gaming machine sales growth, along with growth in its systems and gaming operations driven by more units in the US and Canada and a high average daily revenue per unit. It says it's actively monitoring for any impact of inflationary pressures and macroeconomic impacts on the overall business, along with potential supply chain disruptions for which they say they're ready for increased inventory positions to mitigate any expected delays. Share price is higher this morning. And Myer has downgraded guidance. It's expecting FY24 profit of between $50 and $54 million, down from the $71 million the previous year. The retailer is saying it's feeling the impact of a challenging consumer and trading environment, store closures and inflationary cost pressures. It's warned that the underperformance of its 3 specialty brands, Sass & Bide, Marks and David Lawrence, is expected to represent around half of its year-on-year decline in net profit in the 24 financial year. Total sales in FY24 expected to be at $3.26 billion. That's down almost 3% on the previous year, reflecting the closure of the Myer, Brisbane City and Frankston stores.